All right, everybody, we are going to go through the P&L for the broken wing fly position that we just put on in Snowflake. As a quick reminder here, what is a broken wing fly, right? Well, it's a butterfly where the strikes are skewed. So in this case here, what we have is a long call spread and a short call spread. The long call spread is $7.50 wide. And the short call spread is $2.50 wide. That's what makes it the term broken wing. Gives us more delta, gives us more direction than just a regular butterfly, where regular butterfly is when the distance between the strikes are the same on both ends. As always, which we'll go through on the P&L here, but as always, where would the maximum profit be at expiration? Always at the short strike. Okay, and why is that? Well, in this case, with this position here, that's because our $7.50 wide call spread, if we were at 160 at expiration, would be worth the full value of 7.5, while at the same time, if we were 160 at expiration, the short call spread would be worth 0. So 160 being the short, that's the one spot where the long spread maxes out while the short spread is worthless. So let's take a look at the P&Ls here. Obviously, anywhere below 152.5 and lower at expiration, that'll be our max loss, which we can only lose $1.70 here. At 153, we start making back a little bit. And at 154.20, that would be our break even at expiration. Anywhere over 154.20 at expiration, regardless, we're going to make money on this. And we'll see right here at 160, that is going to be the sweet spot, where you can see right here, our first long call maxes out while everything else is worthless. So what we do is look at what is that P&L there. 580 divided by our investment of 170. What is that reward to risk? That reward to risk is about 3.4 to 1. That is really, really good reward to risk. Now, why are we using that 160 as the center? Well, if we go out to May expiration here and we look at what is the expected move or so, what is the expected move? If we look at 145 or 146 right now is where the stock is trading, what's that expected move? Right? If we look just to add together the 146 straddle, the call and the put, we're almost at about $14. Does everybody see that? $14, I mean, that puts us right at the target of 160. So that's why we chose 160 as the pivot, as the short in this spread. Okay, so going back to the P&L here, anywhere over 160, we're still going to make money. We're just going to start giving back a little bit because our long call spread has maxed out and the short call spread is now starting to be worth something. So that is why we get to the point there, 160 being the max. Anything over that, we can't make any more on our long, but the short starts holding value. And you'll see, regardless, if we get to 162.5, which is the last strike, or higher, the P&L will remain the same all the way through. All right, does everybody see that? Any questions on this? Any questions why we would do this? Why select the strikes that we did? And what the potential P&L is? Looks like we're good to go. I will post up both the spreadsheet and the recording in the room. Thank you, everybody.